Alphabet just reported its first ever $102 billion quarter, proving the search and YouTube ad machine is still a monster. But here's the critical long-term question. Is the golden age of internet advertising nearing its end for a company this big? We've all seen the ad saturation, the rising costs for advertisers, and the user fatigue. I'm Edward Kalstian, and welcome to Egg Capital, where we empower your investing journey. Today, we're diving into the 3 biggest bets Alphabet is making to secure its future. I'm uncovering the bold, new, non-advertising growth engines that will dictate whether Alphabet maintains its position as a multi-trillion-dollar powerhouse or becomes the world's first $10 trillion company by 2030. Let's first acknowledge the elephant in the room. Advertising is still the heartbeat of Google. Search and YouTube ads delivered $74.2 billion this quarter, a 12.6% jump. Search alone was $56.6 billion, showing resilience even with AI chatbots on the scene. But relying solely on this is a vulnerable long-term strategy. Signs of saturation are everywhere. Rising traffic acquisition costs, diminishing returns for advertisers, and increasing user fatigue from constant ads. The business is mature, which means it cannot be the primary driver of the explosive growth investors demand from a tech giant. This brings us to the real growth engine, Google Cloud. Cloud revenue surged 34% to $15.2 billion. This is where Alphabet is pouring its massive $91 to $93 billion in capital expenditures for AI infrastructure. Cloud is not an ad business. It's a business-to-business subscription utility competing directly with AWS and Azure. Its growth is fueled by AI-driven infrastructure and the massive $155 billion in cloud backlog. This is the first and most critical way Alphabet is diversifying its revenue mix. The second major source of diversified revenue is subscriptions. Alphabet just announced they crossed 300 million paid subscriptions led by Google One and YouTube Premium. This is sticky, recurring revenue that acts as a stable counterbalance to the cyclical nature of advertising. How does Google Cloud maintain that speed? The answer is the AI advantage. Alphabet's research and talent are unparalleled, and this is now translating into tangible monetization strategies for their Gemini models. AI monetization goes beyond search. It's in the enterprise solutions. Leveraging Gemini to create personalized premium AI experiences for workspace customers and even in their hardware ecosystem. They are building a full stack system where their chips, their Gemini model, and their cloud platform are all one interconnected service, unlike most competitors. To truly move beyond ads, we must look at the long-shot bets that could become multi-billion-dollar segments. The other bets. While they still posted a loss of $1.4 billion this quarter, they hold massive potential. We need to watch 2 specifically. The first one is Waymo, quietly raking up millions of driverless miles, preparing for mass autonomous ride-hailing and logistics. A $1 trillion market is at stake here. The second one is Verily, working on healthcare disruption and life sciences. This is a deliberate long-term play in a recession-proof sector. Alphabet is essentially operating a venture capital fund inside a tech giant, providing multiple asymmetric bets that can pay off big far from the advertising ecosystem. So what's the verdict? Alphabet is successfully building out an ecosystem that offers diversified dominance. We are transitioning from a company where ads were everything to a company where the future lies in cloud and subscriptions. This diversification makes the company more resilient and defensible against regulators, ad fatigue, and new AI rivals. The core market thesis is simple. Investors are valuing the dominant ad business today, but they are factoring in the growth trajectory of a world-class AI and cloud utility for tomorrow. This dual-engine view is what drives the current premium valuation. The critical factors for success now shift from ad targeting to innovation speed and regulatory navigation. Alphabet is leaning hard into its AI strength, spending over $90 billion in capital expenditures to cement its leadership. Now, before we wrap up, the financial visuals in this video were powered by Fiscal, my go-to investment research platform. Use my affiliate link below for 15% off to level up your stock research at no extra cost to you. Today, we've analyzed the battle between Waymo, thoroughly, and the Gemini-powered Google Cloud. But now I want your take. Which of these 4 pillars will truly drive the largest part of that $10 trillion valuation? Let me know your prediction in the comments below. And if you want to always stay ahead of the biggest technological shifts that move markets, like this video and subscribe to Egg Capital.